Okay, thank you very much. The week started on a bullish note, especially on the T-bills end. We saw a lot of bullish sentiment, due to the liquidity in the system. And so yesterday was the primary auction, which we saw the 91 days close at 10%. 182 days close at 12.49, and then the 1 year close at 12.77. So by and large, it's been quite an interesting week. Today has been quiet because, especially on the T-bills, and people apparently anticipated that there will be OMO auction today, but there wasn't OMO auction.
Okay, so let's talk a bit about that primary auction that you spoke of. So with the 91 day at 10%, of course, the next question many will be asking is that could we slip into single digits? Can you just give us your views on that from the messaging you're getting from the central bank, from the feelers in the market? Do you think that is likely?
Well, it all depends on the market dynamics. It might not, because I don't think that it will be attractive for people to buy at that level. So I think that DMO as well as CBN are looking at the rates, and then they probably will push it a bit further, maybe 10.5 and thereabout.
But is there still reasonable interest from foreign investors at the current levels?
Yes, but again, it would be better, because if you look at the Nigerian market and you look at our rate is still very attractive. I guess the reason why we've not been seeing much of the foreign investors inflow is because of interest elsewhere. But once the economy, once the new government fully take place, and then the confidence is fully back, we see them flood our market once again.
And of course, for the exchange rate, that has been extremely stable over the last few weeks. Do you think there's a chance that we could see some strengthening of the currency? Because it's range-bound in the parallel market, somewhere between 358 and 60. It's been a bit range-bound as well in the I&E window, but really around 360. My question to you is that could we see potentially 358 in the I&E window?
No, I don't think so. If you see what has been happening on the I&E window, it pushed up slightly a little bit. Some few weeks ago, it was around 358, 359, but there's been a bit of demand. So it closed as at today at 361.5 level, but I don't see it get to 368 level. Two reasons. One is because the foreign investors are also still coming, and of course demands are being met. And secondly, CBN is also seriously monitoring it with a robust foreign reserve. CBN is obviously positioned to meet any demand that there will be.
No, but you mentioned that the foreign investors are coming. Now, if they are flooding the market with dollars, then shouldn't that be strengthening the Naira? Shouldn't it be moving us closer to sub 360?
Yeah, that's what I'm saying. You asked the question if I see it as getting to 368.
No, I said 358, 358.
Oh, 358. Of course, sorry about that. Of course, it definitely will get to. If you remember, some few weeks ago, it got to 357.5, 357 levels. So obviously, yeah, it will definitely get to that level, and we see it. This demand we see now is just temporary. I'm sure by the time the foreign investors start coming in, we see Naira appreciate a bit further.
Okay, let's go back to the fixed income markets and just get your outlook on next week. How do you see things playing out next week?
Okay, just before that, I didn't talk about the bond market. The bond market lately have been quiet, though we saw a bit of a bullish sentiment on the 2037 and 2036. So the market itself is largely been driven by customer demand. For next week, we expect to see the bond market still relatively quiet, customer driven. And then on the T-bill side, we also see, we expect that this bullish sentiment will continue. Don't forget that fact is still not out yet. Hopefully it should be out today or hopefully by early next week. So we still see a bullish sentiment throughout next week.
All right, before I let you go, I just want you to comment on the debt management office strategy. Of course, that has an impact on where yields would normalize moving forward. So from their activities, from the calendar that has been put out there, what's your view on the aggressiveness of the government to borrow from the local markets versus what we saw last year? Do you get a sense that they'll be less aggressive this year or more aggressive this year?
Well, the DMO has actually said that they are looking to borrow less this year. But if you see the increase on the budget itself, about 3 trillion extra added to the budget, you see that there's this shortfall. So hopefully they will come into the market. But for what the calendar has stated so far, it doesn't look like they're looking to borrow aggressively on the fixed income market, especially the T-bills and the bonds. They are also playing around the promissory note. Okay, that for me, I think is another way of pushing, settling out some of the obligations. So if you add that to what is happening with the calendar, it seems as if they are not looking to borrow as much as they did last year. However, the DMO is closely going with the rates and monitoring the market as well. If you watch the last auction before this one, the 2 auctions before this one, you see that the auction closed at 13.5, but this last one was around 14.55, 14.48 levels. So that tells you that they are closely monitoring what is happening in the market, and then the market forces as well also playing a key role.
All right, Chuka, let's leave it there. Chuka Nwachukwu, a fixed income trader at UBA, giving us his